So this is an example of, this is the DAX as we are now, and this is a daily candlestick chart. So each of the candles is representing 1 day's worth of trade. So as you can see, this candle, really big down candle, the open was right at the high, so we didn't get a wick forming. If we just zoom in on this, no wick, so the open, it did equal the high. So the close was down at the lows here, really big hammering day, and because the close was lower than the high, lower than the open, we color it red, and then we went a little bit lower on the day, but we didn't quite close on the low, so we've got a little bit of a tail there. It's the same, you know, with any of these. We can start to see now, look at this type of day here, a big high, a big low, but actually the open and close were very, very close to each other. You see how we can eyeball that, and we can see, and if you look the difference between, say, this where the open and close was identical, didn't do much, and then this one here where the open was at the low, the close was at the high, very, very not much wick or tail at all, showing us that it was a trend type day. We get a lot of information there. But of course, as day traders, that's not really useful. We've got almost a year's worth of information now. I'm just scrolling my mouse to be able to do this. And by the way, a link to these free charts again is available at the end. I'll put it all in one easy to reach area, tools area, so you can look at this and go and grab these charts if you haven't got them already. So 1 day, 1 candle, not very good for day traders. Let's say I want to now look at an hour. So I changed my interval, and now it's telling me that each candlestick represents an hour worth of trade. But can you see how much more information we have now got? Okay, we have got 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 10. We've got 10 days worth of trade. So we've condensed it down. We can't see what happened at the beginning of the year because we don't care. We're day traders. We're just looking for an opportunity. Or we're swing traders looking for a short-term opportunity. We know what happened in a year because we've looked at our daily chart. Now we're trying to drill down a little bit into the time frames to see a little bit more carefully what's happened. So there's our hourly chart. So what do? We can deduce from that. We can say, well, actually, look, you know, 5 days or so ago we were up at these highs at the price there on the right hand side, 10,760. We fell pretty hard. We gapped lower on this day. We managed to fill that gap, but we're now, you know, coming down here and we're playing around with this level down at the low. So that's a bit more information there. So now we might move to a 15-minute chart. And a 15-minute chart, again, just means that each candle is made up of 15 minutes worth of trade. So now you can see we've got much less in terms of the amount of days in the chart, but much more focused and drilled down information. We're starting to look with a magnifying glass or a microscope as opposed to binoculars. So we look at a broader picture with binoculars, and then we look with our eyes, and then we look with a magnifying glass, then with a microscope to try and get information. So I'm starting to see a little bit more information now. I can see more clearly yesterday how we traded, the highs and the lows of the day, how many times we touched those highs and lows of the day. Where we open, where we close, how it was relative to the prior day's trade. And now I'm going to drill down even more. I'm going to go into a 5-minute because I want to see more trade of the today. I want to see exactly what happened in the afternoon. So from sort of 1:30 right the way through to today, I want to see exactly where we've gone. And now I can see that each individual ebb and flow of the market in much more detail than I would do if I had a higher time frame. And then I'm going to go even closer. I'm going to say, right, I know what I'm going to do now. I'm going to look at a 1-minute chart. And I'm going to see exactly what's gone on. And I can see, look at this spike we've had just in the past 20 minutes or so. We had a big spike up out of nowhere, took out the highs, and now we're just drifting back. So each candle is representing 1 minute, and you can see how this one's produced now. It's ticking around with the price as it changes on the exchange. You know, we're 10,398, 10,399, 10,398, and the candle is changing as we go. You can see it's changing from red to green now because obviously the open was at 10,3. Where is the open? Let's have a look. The open was at 10,397. So every time the price is above that, and if we close here, we're going to get a green candle. If we close below that, we're going to get a red candle. So you can see how we start to get a bit more information, but it's a trade-off. Do you want all the information from all the days, or do you want just the information from the current day? Now we'll look at some best practices in a moment, but just understanding the concept of the sacrifice you go if you're going into a smaller time frame, but also the benefit. And it's about appreciating the benefits, disadvantages and advantages of different time frame charts and integrating those into your trading.